Fed's Waller wants more evidence inflation is cooling before cutting interest rates. HEPONT's Federal Reserve Governor Christopher Waller said Thursday he will need at least another couple more months of data before inflation is falling enough to warrant interest rate cuts. While he said he still expects the FOMC to begin lowering at some point this year, Waller said he sees predominantly upside risks to his expectation that inflation will drop to the Fed's 2% goal. The remarks are consistent with a general sentiment at the central bank that while further rate hikes are unlikely, the timing and pace of cuts is uncertain. Federal Reserve Governor Christopher Waller said Thursday he will need to see more evidence that inflation is cooling before he is willing to support interest rate cuts. In a policy speech delivered in Minneapolis that concludes with the question, "What's the rush?" on cutting rates, the central bank official said higher than expected inflation readings for January raised questions on where prices are heading and how the Fed should respond. Last week's high reading on CPI inflation may just be a bump in the road, but it also may be a warning that the considerable progress on inflation over the past year may be stalling, Waller said in prepared remarks. While he said he still expects the Federal Open Market Committee to begin lowering rates at some point this year, Waller said he sees predominantly upside risks to his expectation that inflation will fall to the Fed's 2% goal. He added that there are few signs inflation will fall below 2% anytime soon based on strong 3% annualized growth in gross domestic product and employment, with few signs of a potential recession in sight. Waller is a permanent voting member on the FOMC.